Welcome back to our Infinite Banking Versus series. My name is Jonah Du.
And I'm Sean King, and today we're tackling one of the most debated topics in personal finance, comparing the infinite banking concept with mutual funds. Now, we know these two vehicles are very popular among investors, but they serve very different financial goals and strategies.
Before we dive into these 8 key ideals that we want to talk about, let me first set the stage for you. So first, let's talk about the infinite banking concept, or IBC. Essentially, IBC is a strategy that leverages whole life insurance policies as a personal banking system. With a properly designed policy, you build cash value each and every year over the course of your whole life, which you can then access through policy loans for virtually any purpose, all while enjoying guaranteed growth and a tax-advantaged structure. It's a system that's built on predictability, safety, and long-term wealth transfer.
On the other hand, we have mutual funds. Mutual funds are pooled investment vehicles managed by professionals that invest in a diversified portfolio of stocks, bonds, or other securities. They're designed for investors looking for potentially higher returns through market exposure, albeit with the inherent volatility and risk of the market. Mutual funds are incredibly popular, especially for retirement savings and long-term growth, but they depend on market performance and active management.
Both options come with their own set of advantages and challenges, so whether you're leaning toward the steady, controlled approach of IBC or the dynamic, market-driven returns of mutual funds, understanding how each platform under various conditions is key to choosing the right strategy for your financial goals.
Exactly, Jonah. So today we'll compare these two options through the lens of our 8 essential ideals: principal protection, guarantees, safety, liquidity, rate of return, use, taxes, and long-term legacy. So if you're curious about which option might align best with your financial values, be sure to stay tuned. Okay, Jonah, let's start off the comparison with principal protection. When you invest in mutual funds, your capital is exposed to market fluctuations. There's always a risk that in a market downturn, you could see significant losses on your investment.
With infinite banking, however, your principal is safeguarded. The cash value in a properly designed whole life insurance policy is not subject to the market risks. It actually grows consistently over time, backed by the insurance company itself, which provides you with a sense of security that just isn't dependent on market performance. You can sleep well at night.
That's a good point, but while IBC does provide excellent protection, it often comes at a cost of slower growth during booming market periods compared to mutual funds.
That's true, but if your priority is not to lose your initial investment, then infinite banking's consistent risk-free growth is probably a really compelling benefit.
I agree, Jonah. I definitely don't want to lose my money. I think that's a great segue to move into ideal number 2, which is guarantees. Mutual funds offer no guarantees. The performance of your investment is entirely tied to market conditions and decisions made by fund managers. Hopefully, my fund manager spends good quality time with my investments.
I hear you, Sean, but in contrast, infinite banking comes with built-in guarantees. The cash value growth is contractually guaranteed, and your death benefit is predetermined. So on top of that, many policies pay dividends. Any policy that we use pays dividends, and that just further enhances your growth over time.
Keep in mind, those guarantees in IBC require higher premiums compared to simply investing in mutual funds. You're paying for the reliability and the predictability of the system.
See, that's an investment in your financial peace of mind. Sean, what about safety? Safety's a critical consideration. Mutual funds are generally subject to market volatility. You're going to have economic downturns sometimes, geopolitical shifts, and of course just the ever-changing dynamic of global markets that all impacts your investment, right?
Now, IBC, on the other hand, is backed by the enduring strength of mutual insurance companies that have stood the test of time. Seriously, these companies are over 100 years old, some closer to 150 years old. They are foundational pieces to our country and are known for their financial stability. Plus, they have extremely rigorous regulatory standards to follow, which in turn translates into a very safe, financial product.
With infinite banking, you don't have to worry about waking up to sudden market crashes. It's a controlled and secure way to grow your money.
Speaking of growing your money, let's discuss accessing it. Liquidity is our next ideal. Mutual funds are generally liquid. You can redeem shares relatively quickly. However, there may be penalties or tax consequences for early withdrawals, especially in retirement accounts.
See, infinite banking offers a really unique approach to liquidity because you have actually access to your cash value anytime through policy loans. The best part about that is there are no penalties or tax impacts when you borrow against your policy, one. And two, your policy's contributions continue to grow guaranteed.
Yeah, I hear you, Jonah, but what about the interest rates on those loans? Can't forget about those.
Okay, yeah, some might worry about the interest on those loans, but when it's managed properly, the interest essentially gets recycled back into your policy, which maintains your growth trajectory. So it's a liquidity solution that provides flexibility without sacrificing long-term value.
You know, I think the key reason people decide to put their money in mutual funds is really as simple as the rate of return that they could receive. Now, historically, mutual funds have delivered on average returns around the 7 to 10% annual rate over a long term. Though, there's always the uncertainty of the market swings, and you've got to be patient enough to ride the waves, hoping you don't get caught in one of those bad recessions come retirement time.
Infinite banking typically delivers more modest returns in percentage terms, but the growth is really steady and it's predictable. So instead of chasing market highs and lows, you're assured of a controlled growth rate that's just not subject to market volatility. A lot of investors, people really like that.
So for investors comfortable with a bit more risk, the higher potential returns of mutual funds can definitely be attractive. But if you value predictability and control over your financial future, IBC really might be the preferred choice for you.
In my opinion, one of the coolest features of the infinite banking concept is the fact that you could utilize the infinite banking policy and then take the cash value and invest in those mutual funds if you really wanted to. It just gives you the flexibility to do both. I think that's awesome. Let's jump into the next one though. The next thing we want to talk about, the next ideal is just use. I want to know, can I get access to the money? Can I use it?
Yeah, when it comes to use, Jonah, IBC is much more flexible in this regard. The cash value you build up can be accessed through policy loans for any purpose, whether it's funding a business venture, covering college tuition, or even financing a family vacation. I've done that many times. You can access it with no questions.
You know I love a vacation. It's about having a living, breathing financial asset that serves your immediate needs while continuing to work for you. That's so important.
Yeah, man, and that kind of flexibility is hard to come by with traditional investment vehicles, but most people understand that. All right, let's talk about everyone's least favorite topic, taxes. Taxes are a major consideration for any investor, right? With mutual funds, you're liable for taxes on dividends, capital gains, and sometimes even on withdrawals. Even tax advantage accounts like Roth IRAs have their limitations.
With mutual funds, the money's usually tied up for retirement or just long-term growth. If you withdraw early, there's penalties, there's taxes. It can really take away from your gains. Infinite banking, however, operates in a very tax-efficient manner. The growth of your cash value is tax-deferred, and policy loans, if you manage them correctly, can be tax-free. Additionally, the death benefit paid out is tax-free for your beneficiaries.
It's a system really designed to maximize your after-tax wealth over your lifetime and beyond.
All right, Sean, last but not least, man, let's talk about long-term legacy. Mutual funds generally aren't designed with legacy planning in mind. That's not that type of vehicle, right? So when your heirs inherit these accounts, they probably are going to face taxes and other complications that just diminish the amount that they actually got.
With IBC, the death benefit is a powerful legacy tool. It's really designed to pass on your wealth to your beneficiaries 100% tax-free, ensuring that the financial legacy that you built isn't eroded by taxes or fees. Plus, when you participate in the infinite banking concept correctly, the death benefit just keeps getting bigger and bigger every year.
So this isn't just about leaving money behind. It's about establishing a financial system that can support future generations. It's echoing the values that you've built during your lifetime for your kids and for your kids' kids, and as far on as you want to go.
mutual funds or infinite banking? The answer really depends on your personal financial goals and risk tolerance. But don't forget, there is a possibility to do both if you like the idea of risk and guarantees.
But let me be clear, if you're chasing higher returns and you're comfortable with market risk, mutual funds might be right for you. But if you value safety, consistent growth, long-term control over the wealth, then infinite banking is probably your ideal strategy.
Remember, the choice isn't about one being universally better than the other. It's about which system aligns best with your financial values and goals.
Sean, I couldn't agree more. If you're watching, thanks for doing so today. If you enjoyed this little bit of a deep dive, then like the video, leave us a comment if you've got a question, we'll answer it, and subscribe to the channel for more insights. If you really want to chat with us, you can click the link in the description of this video and you can get on mine or Sean's calendar. Not only do we have a full-length presentation on the infinite banking concept, we will discuss all your financial strategy in any detail you want. Look forward to talking to you soon.